Welcome back to our channel. Today, we're diving into a powerful tool for traders, the Knoxville Divergence Indicator. By the end of this video, you'll understand what it is, how to set it up in TradingView, the best settings for different time frames, and how to interpret it for buy and sell signals. Plus, we'll explore combining it with other indicators and discuss essential risk management tips. What is the Knoxville Divergence Indicator? The Knoxville Divergence Indicator is a unique tool that helps traders identify potential reversals in the market by spotting divergences between price action and momentum. Divergences occur when the price of an asset moves in one direction while an indicator, such as the RSI or MACD, moves in another. Knoxville Divergence visualizes these divergences directly on your price chart with lines, making it easier to spot potential trading opportunities. How to set it up in TradingView. Open TradingView and select the asset chart you want to analyze. Click on the Indicators button at the top of the screen. In the search bar, type Knoxville Divergence and select it from the drop-down menu. The indicator will be added to your chart, displaying divergence lines. Best settings for different time frames. Optimizing the settings for different time frames can enhance your trading strategy. Short-term traders, intraday, use a shorter look-back period, such as 5 to 10, to capture quick divergences. Swing traders. A medium look-back period of 14 to 20 works well for capturing intermediate-term divergences. Long-term traders consider a longer look-back period, like 30 to 50, to identify significant divergences over extended periods. Adjust the sensitivity according to your trading style and the asset's volatility. Interpreting buy and sell signals. A bearish divergence occurs if the divergence line appears above the price during an uptrend. It signals a potential trend reversal to the downside. Conversely, a bullish divergence occurs if the divergence line appears below the price during a downtrend. It indicates a potential trend reversal to the upside. Using it in combination with other indicators. For more robust trading signals, combine the Knoxville Divergence Indicator with other tools. Example, pair it with the Relative Strength Index, RSI. When you spot a bullish divergence on the Knoxville Divergence and the RSI is below 30 oversold, it strengthens the buy signal. Conversely, a bearish divergence combined with an RSI above 70 overbought enhances the sell signal. Risk management. Proper risk management is essential when using any indicator. Always set stop-loss orders to protect your capital. Avoid over-leveraging your trades. Diversify your positions to mitigate risk. That's it for the Knoxville Divergence. If you found this video helpful, please hit the subscribe button and press the bell icon so you never miss an update. For a more in-depth info on this indicator, visit our website at brokercheck.co.za. Thanks for watching and happy trading.